Now let's bring in Thomas Hayes, Chairman and Managing Member from Great Hill Capital. Good evening to you, Thomas. So basically, at the moment, we are looking at more volatilities in the market since the start of October. So looking ahead, what kind of downside risks that investors should be watching out for?
Well, thanks for having me, Henry. I think that it's simply that time of year. If you look at the presidential cycle, the fourth year during an election year tends to be a more choppy season. We're trading at 21 times forward earnings. The market is pretty fully valued, and we're starting earnings season this Friday with the big banks. JP Morgan, Citibank are going to report earnings. Earnings are expected to be a little bit lower because of light loan demand and decreasing net interest margins. So I think you could see some choppiness and some uncertainty into the election. We have raised some profits, raised a little bit of cash to be able to buy in if we get any weakness before the election. And I think once the election clears, Henry, after early November, I think you're going to see a year-end rally. There's a lot of pent-up demand, a lot of managers behind their index that will have to chase into year-end.
Mm-hmm. And we're also closely watching U.S. inflation number coming out later this week. In the situation that Fed is less aggressive in its rate cut plan, so how do you think investors should prepare for that kind of situation?
Well, headline inflation is projected to come in lower than last month, 2.5 last month. Expectations are for just 2.3 this month, which is very subdued inflation, which would actually put a clear indication that we could see 25 more basis points of cuts in November and 25 more basis cuts in December. So a total of 50 more basis points cuts, provided that number comes in as weak as anticipated headline inflation on Thursday. So we've got the inflation numbers on Thursday that are going to be critical as it determines what the Fed is going to do in November and December. And we have earnings. The key thing about earnings is expectations for Q3 earnings growth as of June 30th were 7.8%. Analysts have brought down expectations to just 4.2%. So they've lowered the bar. And a saying I always like to say, Henry, is the secret to happiness is low expectations. And they've set the bar low for Q3. So we may see some positive earnings surprises as the weeks wear on, which should bode well for the end of year performance after the election clears.
Mm-hmm. And we are seeing some rotation happening, especially in tech sector as well as small cap stocks. What's your take on those?
Yes. Yeah, I think what you see historically after the first Fed cut, and today was a one-off, certainly tech did well. They've been beat down the last couple of months, so they're gonna see a bounce. But I think if you look past a few days or a few weeks, after the first cut and the easing cycle begins, what we're seeing is a broadening of participation in the market. So the tech-centered Magnificent Seven have been underperforming in recent weeks, and the unmagnificent 493, I like to call them, the rest of the S&P 500, have been outperforming. You'll see it in fits and starts, but on balance for the next 12 to 18 months, we believe that theme is going to persist, which does mean small caps will start to outperform large caps. That's historically true in the first 12 months following a Fed cut. By 11%, small caps outperform. Value stocks outperform growth stocks in the first 6 months after the first Fed cut. And emerging markets will start to outperform developed markets for the first time in basically a decade. And that's due to, number one, a continued trend of a weakening dollar. And the Chinese government, although they didn't give the market what they wanted today, after a 50% rally, we gave in a handful of weeks, we gave a little bit back today and probably will for the next couple of weeks, consolidate those gains. They'll be back in the market. Their initial indication was they were going to do what it takes. And I don't believe they want to give up the gains that they've already seen and get their country back to that 5% target that they set.
All right, Thomas, thank you for your analysis. Thomas Hayes, Chairman and Managing Member with Great Hill Capital.